Wayne, thanks for coming in.
Sure.
So we've had pretty much a flat JSE at the end, but as I said earlier, there was some significant activity today, wasn't there?
Yeah, look, the mining shares went down. That's on the back of Vale, as you said, bringing on some more iron ore. But understand the iron ore market is still in deficit. I mean, there's still more closed. And in fact, BHP announced today that they're going to disappoint a little bit with their iron ore deliveries out of Australia because of a cyclone they had there. So although the price has come off, understand there is still a deficit of probably 30 million tons in the iron ore market. So don't expect the price to fall too much.
Yeah. And it's interesting with the mining shares because they had some ups and downs, a lot of ups in the last few days, isn't it?
Yes, very much so. I mean, mining shares have been the best performing sector of all the major sectors for a number of years now, but they're starting to look a little bit expensive in my view, simply because global growth is starting to slow down. It's still growing, but the growth rate is slowing down.
Yeah. We'll get into some of those interims and updates in a moment, but I just want your take on two important pieces of economic data out today. Number one, inflation, 4.5%. Retail sales, Wayne, 1.1%, but as I said earlier, that's not enough to contribute to economic growth, is it?
But at least it's going in the right direction. Look, there's many, many reasons why the consumer's not spending, but one of the biggest is sentiment.
Yeah.
They're sitting back and they're waiting to see what's the election going to do. At least we've got the credit rating behind us now for a while, so we don't have to worry about that anymore. But I think there'll be a positive turn of sentiment after the election, and that should bode well for consumer expenditure.
So the share that everyone's talking about, well, at least from what I hear, EOH. So you've had this massive recovery, 55% up just yesterday alone.
And today again, strong.
Yeah, and it continues. We know it's had problems in the past, but of course it puts over now a turnaround plan, and it looks like the shareholders are loving it, investors are liking it. Are you convinced?
Look, I will still sit back and wait for a while. But what we do know is it's still profitable. They're making 350-odd million at the operating level. We also know that although it's been written down, there is still a net asset value of 4.5-odd billion in the company.
Yep.
But understand the biggest reason why the share price has spiked so much is that people were short-selling the share. They literally were short-selling it. So what happens when you short-sell is, I borrow a share from you at 100 Rand. I sell it in the market at 100, and I think the price is going down. If I'm right, I can buy it back at 50 and give it back to you and make profits. Now, if that price starts to go up, as what happened with EOH, you've got to cover your position, otherwise you are going to lose serious money. So the massive spike is guys that have just been in a complete squeeze, guys who are short the share in a squeeze, and they've got to cover their position almost at any cost, and that's why you saw the 50%, and I think today it was even 30% at one stage.
Indeed. If we take a look at EOH a year to date, I suppose we get a bit of a different picture there, because that graph looks somewhat different. So we can see that spike towards the end, but look at that. I mean, it certainly did lose value.
And if you go back further, I think it peaked at 170.
Yep.
So it's gone from 170 to 10 back to 20 of 22, 23. So it's fallen a long way. Look, it's not going to go back to 170 for a very, very long time, because simplistically, their profits last year were 1 billion. This year, they're 350 million.
It's a massive difference.
Big difference.
Wayne, so we've had some retailers out, Clicks, Massmart. Let's start with Clicks. Impressive interim results. They're telling us that it's due to the Clicks private label, and consumers are buying the Clicks private label. Yeah,
look, when you look at their results, it's very different to most of the other retailers. Look, Pick n Pay's also looked right, but the other retailers, the results weren't bad, but they were very mediocre, if slightly disappointing. So certainly Clicks looks a lot better, and I think it is because of the product that they're selling, but they've always done well. I mean, they're opening up a lot of stores. Massmart also came up with a very brief trading statements, only for a 13-week period, but that was also showing quite a positive trend. So certainly Clicks and Massmart were up quite strongly today.
Just before I close here, what do you make of this deal? 5 months later, we've got an agreement between AMCU and Sibanye. How significant is this?
Look, it is quite significant in Sibanye's life. Platinum's more important to them, and US Platinum's the most important of it all. But, unfortunately, both sides lost here. I mean, the company's come out and said, we've lost 1.6 billion. Whether that's right or wrong, or how you work it out, but even if it's half that, it's still a significant amount of money. And for the 5.5% increase that the workers got, They were going to get that before going on strike, so they're not getting paid back for their lost wages. I mean, they are making a gratuitous payment, but even that is very small in relation to what they've lost as earnings. So quite frankly, nobody won.
Yeah, I'd like to hear what AMCO says about that. Wayne, thanks very much indeed
Pleasure.
for coming in.